Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with Wall Street, where we saw a very volatile session overnight, down as much as 2% during the session, but in the end those losses were tapered and the Nasdaq even managed a small gain. What's the story in the global markets?
Yes, if you look at the U.S. market, Dow Jones fell by about 150 points, fourth straight session of losses, while S&P 500 slipped by only 0.1%, a five-day losing streak. Meantime, particularly related to Nasdaq, it was quite a bit of a big swing. What we saw at the beginning of the session, it did go down by 2.5% plus. But recovered and ended with a slight gain. If you look at the concern of the market, continuously worried about the faster pace of tightening by Fed, they are expected to do tapering quickly, and then most of the people are now expecting that the first rate hike will be happening in March. And after that, every quarter once, meaning that as much as 4 times this year. The Fed been saying that on FMC, they will be doing about 3 times the rate hike, but clearly now market is thinking that it will be much faster pace. Main reason for that is because of concern of the inflation. And we do expect the inflation numbers to come in this week. So we'll be watching closely how the policymaker will be moving in terms of the timeline for the Fed funds rate hike. Obviously, this also go along with the corporate earnings where most of the banks will be releasing their earnings first. So this week, Wells Fargo, Citigroup, and JP Morgan are expected to report on Friday. So we'll be watching carefully. All in all, what it means is that the economy is quite strong and inflations are strong, and therefore what matters is what's happening to the earnings. We do expect the economic growth should be quite reasonably good, while that triggers down to the earnings growth rate for certain companies. Overall, S&P 500 is expecting 7.5% year-on-year growth rate of earnings and 9.5% growth of sales. We'll watch how that plays out as the month passes. We are expecting the first batch of results to start to kick in within this week, and we'll see some more next week and kind of figure out how things are moving accordingly.
We'll look forward to looking through that with you. And also up and down today in the Korean market, we saw individuals and institutions both selling, foreigners buying. A nice gain for chipmaker SK Hynix. LG Chem is continuing its rebound since the new year. Shares of Kakao, though, continuing to slide for the past month or so. Tell us about the domestic market.
Right. It's kind of similar move where what's happening to U.S. Everybody is looking at the growth stock with no earnings, that being quite a bit of a selling pressure. So any type of metaverse or bio stocks and et cetera all get affected. That's the reason why if we look at Nasdaq, it's down by 1% plus today, while the Kospi recovered slightly. Pretty much it was down as much as 0.8%, but did recover back to about 0.02%. So basically pretty much flat. All in all, main reason for that kind of recovery is happening because of the Samsung Electronics and SK Hynix earnings, the share price recovery. We did see preliminary results coming from Samsung and looks quite good. The bottom line earnings are slightly lower than expected, but in terms of the sales number, it is very well above the expectation. We will get these results coming from the semiconductor industries, any of the major industries that Korea are quite competitive globally, with also even oil prices and petrochemical products, earnings should be quite good as well. So all in all, we're watching closely what will happen to the earnings numbers. So everybody knows that the liquidity condition is going to be quite tight this year. BOK is expected to do a meeting this week, and maybe they might be raising another rate. So clearly the liquidity conditions are more about tightening side. So what means is that we need to look at the earnings. If the earnings supports, then the market will not go down. Earnings cannot be sustained, and obviously market can be in for quite a bit of volatilities and declining trend. So we'll watch closely what happens to the earnings.
Well, if we could talk about oil prices for a minute, the spread of the Omicron variant has raised concerns about falling demand, which of course would tend to lower prices, but there are also geopolitical issues adding pressure on the supply side. Oil prices are down today, but they're still significantly higher than a month ago. What's driving prices right now, and what's your outlook?
Right. If you look at the oil prices, it's now around $78 per barrel. It's kind of up and down right around that territories. Slightly, it reached well above $80 for the brief moment. It did go down again, but nevertheless, the oil price remains to be fairly high at around 78. As you said, geopolitical issues remains to be quite a bit of a problem. But if you look at the Libyan and Kazakhstan, they are putting in more of the productions, and the Libyan production rose by 900,000 barrels a day. So it continues concern about the geopolitical issues, but nevertheless, we think that the supplies are coming in nicely. As far as the uncertainty about Omicron issues, we don't think that impacts much, given the fact that a lot of these Omicron cases are not resulting into death. If you look at the death rate, is very, very low. So we're probably looking at more like a flu kind of way of looking at this Omicron COVID-19 cases. So all in all, we think the economic recovery is in the right track. With the supply concern is being a little bit eased, so supply and demand side might be quite of a reasonably intact, meaning that price is not going to go up particularly high or go down significantly. It's just going to be trading at a range bound. We think that anywhere between $65 to $80 per barrel kind of trajectory is expected. A lot of people, economists, are expecting that the oil prices should be reasonably stabilized over the next 1 year, where it might fall to about $70 per barrel 12 months from now.
Finally, Mr. Yu, data for November show Korea with a current account surplus now for a 19th month in a row. That's going back to May 2020. A strength in exports of petrochemicals, steel, semiconductors. What's the situation in trade, and what stands out here to you?
Yes, as you said, it's the 19th month of surpluses in terms of the current account. But the surplus has narrowed slightly to $7.16 billion in November from surplus of $9.18 billion a year earlier. The main reason for that is because of the import prices rising, affecting the overall import to be increasing quite sharply. That is because of the high energy and raw material prices. If you look at the import increases, it is from by about $16.75 billion to $53.7 billion in November, mainly once again driven by the surge of raw material prices by 72.9% year on year, particularly crude oil jumping by 127.8%. So all that results into the trade surpluses becoming trade deficit. That results into a narrowing of current account surpluses. However, though, the export numbers remains to be quite strong. Totaled $59.65 billion compared to $46.92 billion a year earlier. Given the fact the economy is recovering and global economic recovery seems to be in the right track, as we said, COVID-19 is not really affecting much anymore, and that the consumption growth is happening in a global scale, particularly in U.S. wage growth resulting into consumption growth, and that results into quite strong export by Korea to U.S.
All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We do appreciate it.
Thank you very much.